computer have intrinsic value. And I think that's a big part of the generation gap, to be honest. I mean, it's funny to watch kids get Bitcoin much quicker in the sense because they're so used to paying for code. And especially the ones that are on the older side, you know, if they've bought skins in a video game, they'll definitely tell you, yeah, code can have value. But they also get this other insight into it then, like when their favorite video game, say, goes away, where the company, you know, can't be profitable anymore and shuts down their servers, all of that money that they spend in that game for skins and cosmetics and things like that, that all just goes away too. So the idea to them that there's something they can buy in the digital space that no one can take from them, that'll always be there, regardless of what happens around on the internet, as long as the internet continues to function, Bitcoin's network will continue to run. To them, it's an easy sell. I think it's hard for the older generation, especially the ones that are less computer tech savvy, to really come to terms with that as a reality, because to me it's almost like fighting the tide. Like the world is going to continue to become more digital unless we have some kind of apocalypse, which none of us want. So the question becomes, how could we move forward in that scenario? And I think Bitcoin, that's where Bitcoin's strongest case comes in. And once again, your greatest weakness is also your greatest strength. The fact that Bitcoin is a purely digital asset means that it doesn't require any physical space. You don't have to store it anywhere. And that too is another part of the generation gap, where you've got a lot of millennials and Gen Zers that aren't going to be able to afford houses because of the way the current system is. And they're kind of more transient than previous generations. And the idea to them of trying to make sure they keep their bar of gold doesn't sound very enticing to them. But the idea that they can have 24 words hidden away somewhere and they can just keep saving money in that, and 5 to 10 years down the line, they're pretty certain it's going to be there and be worth more, is a powerful argument.
Now, you said that all gold bugs seem to think that money needs to have intrinsic value. I guess I might be an oddball then, because I actually don't think money has to have intrinsic value. And as you said earlier, I said money is whatever you and I agree it is. And in the broader sense, it's really what the societal agreement is. If you go back in history, there have been closed societies that have used things that are completely without value as money. I mean, you go to the Isle of Yap, they use those big heavy stones.
Yeah.
And it was a system that seemed to work. People used to use seashells. They used to use small animal hides, although the animal hides, you could argue, probably did have some use, but certainly the seashells wouldn't have. And, like it or not, we have this fiat money system right now where we have the paper circulating around, and one could argue that the paper itself has absolutely no intrinsic value. And yet, for decades and decades, it seems to have held together, albeit for less and less value. So what I think is important to bear in mind, though, is that in order for the value of money to endure, there has to be something that anchors the societal agreement, right? And so, if we ask about what gold's intrinsic value is, one would say it's the fact that, not everybody can have it, especially in quantity. It's very rare. It takes a lot of power to produce it. You can't counterfeit it. Gold's price is far, far above the amount of power that it takes to produce it. So you'd argue that in addition to having that intrinsic value, there's something well over and above that. And that is the desire of people to own it, right? It's kind of like, a Van Gogh painting. The Van Gogh painting itself, you'd argue, doesn't have nearly the amount of intrinsic value as people ascribe to it, right? I mean, it would go on auction for millions and millions and millions of dollars. And you can't tell me that a person is going to have a Van Gogh painting in their house and get millions and millions and millions of dollars worth of enjoyment looking at that Van Gogh painting. And yet people have, over time, agreed that that Van Gogh painting has a particular value. And it's partially due to the fact that, not everybody can own it. It has a certain amount of rarity, right? And yet over time, society has come to settle on, this is approximately the value of something like that. Same thing with very rare bottles of wine. Now, these things aren't used for common everyday transactions. However, they could be used as a store of value. And some stores of value have been used as money in the past, and gold is one of those assets. But, going back to the original discussion, I'd say, no, gold doesn't, or money doesn't necessarily have to have intrinsic value, but it does have to have a societal agreement about that value that endures.
So I'm going to slightly disagree with you. You're completely right on everything you just said. I just think that when you look at that, the intrinsic properties that made gold keep its value for so long. When we talk about something being durable, portable, fungible, divisible, scarce, Aristotle's original definition of why gold was chosen as money, and which to me is why gold has held its value for 3,000 plus years, as opposed to like the stones that you're talking about, or I heard a story about beads in Africa where there were glass beads used to be used as currency. And when the British came over, one of the things they did was, oh, you guys use glass beads. And they just brought over a whole ton of glass beads and pretty much owned everything there then. So that to me is like, in the short term, anything can be money as long as we agree it is. But in the long term, I kind of think human beings are smart in mass. Like, I know they can be dumb, very, very dumb in the short term. But over the long term, what seems to happen, it's almost like a type of Darwinism, right? Where intelligent people will see the beads coming in and be like, I need to get out of those beads and get into something else. And to me, that's why gold is what gold is. Why you can still take an ounce of gold, and like you could buy the Roman toga, belt, and sandals. You can buy a nice suit today with it. Those properties of durability, portability, fungibility, verifiability, divisibility, those are what really make it great money. And when you look at what Bitcoin was designed to do, it was designed to take all those properties of gold and exacerbate them in the digital world. So a good example of that would be if you think about the map companies that used to exist back before the internet became smartphones became as big as they were. Those were the biggest map making companies. Cartographers were about $50 million companies. And if you look today, Google Maps is worth a couple of $1 billion. And part of the reason is inflation, but a big part of why it's so much more is because of how much more they've added to it by putting it into the digital space. You could never take a map out of your pocket, pop it up on your dashboard, find exactly where you were, what direction you were pointed in, and highlight the road that went from point A to point B. Now all of that is just seamless. And I think that's what you're seeing happen with finance and cryptocurrencies in the digital world.
Mm.
You can feel free to disagree with me on that. I always.
No, that's okay. I mean, I totally understand what you're saying and respect your points. I guess there's a big difference between stores of value and money, right? Because money, while we want it to be a store of value, it doesn't necessarily have to be a store of value. I mean, the Federal Reserve note has been used as money in this country and in fact in the world for many years, right? And the quantity has been always increasing. And yet people use it as their money, right? Now,
well, they use it as their currency, right?
I would argue that using it as a store of value for your main savings is probably somewhat foolish, given the history of what's happened to the value.
Totally.
And, you know, people do it, right?
Yeah, no, but I mean that's perfectly legitimate. I'm just saying that, man, maybe we're just defining money slightly differently, and that once again, that's part of the problem. Is these terms have become so nebulous. That difference, that distinction between, you know, if I say the word money to someone, they're going to think of a dollar bill, and to me, that a dollar bill is not money. It's a note of debt, right? Like, and.
Now we're getting down to it, right?
Yeah.
I think everybody agrees that the Federal Reserve note right now has some value, right? Because we work for it, we accept it in payment for things. When we go to the grocery store and we try to make a transaction, you know, the grocer will exchange toilet paper for Federal Reserve notes or cans of peas or a steak or whatever it is you want. Now, in terms of money being the store of value, see, the Federal Reserve note is not my money. Gold is my money, right? I use the Federal Reserve note short term, but I don't save in it. I save in gold and I save in other things.
So you use it as currency, not as money.
Well, I guess there's kind of a soft, blurry line between them, right? Because for, let's say, for things that I know I'm going to need to buy within a month, within a year, yeah, I want to have a certain number of Federal Reserve notes in my bank account, right? Because that way I'm not subjected to variations in price and the impact that it would have on my buying power, right?
Yep.
But anything beyond that, I'm saving in something else. I am not saving in Federal Reserve notes. And, you know, I don't want to put words into your mouth, but I'm pretty certain you do the same yourself.
100%. I mean, well, no one that looks at the graph of the purchasing power of the dollar for the last 100 years can look at that and go, that's a good place to store my value, the value of my labor, right?
I'm going to ask you a question now. Okay, I'm going to go off script because I know that my subscribers have asked a lot of questions. Now it's my turn to ask a question for you.
All right.
I remember before this discussion, right, we had a little email exchange, and you mentioned to me that a lot of people that are in the Bitcoin world, you know, they kind of cash out of Bitcoin when the time is right, when the price rises significantly, and then they use the profits and they take profits and they store it in something else like gold. Yep. And then you know, when the price of Bitcoin goes down, they might reverse that transaction. Is that what you do?
I try to. Well, you know, actually, I probably will this cycle. I haven't done hardly any of that, to be honest with you, just because I see Bitcoin as such. Well, I mean, it's been so volatile, but I believe in it enough that I haven't wanted to either get the tax ramifications for it, and I haven't had any clue as to what the market cycles look like. And to be quite honest with you, nothing's taught me about market cycles like being involved in Bitcoin for this long. So, but I mentioned to you, I'm usually on the other side of this discussion with Bitcoiners, which is kind of funny because they're very open to the idea of gold as a store of value. They get it. And I know more than a few that are kind of more on the younger millennial Gen Z side that definitely get that argument, and they look at it as almost like a diversification in their store of value. So the same way that I own some gold, even though I'm a majority of Bitcoin, I know that physicality of gold, that ability that even if the internet goes completely down, I can still use that, has some added value that Bitcoin doesn't. So I've read and seen more than a few Bitcoiners right now that talk about like this market cycle that we're in the middle of right now. It being a really good idea that if you get to the top of it in terms of